As a outcome?
Yes, yes.
Okay.
Morning.
Good morning, ma'am.
Sorry?
Good morning.
Oh, good morning. How are you, dear?
Fine.
Avish Munir. Who is Avish Munir? Is he your brother?
No, ma'am.
Okay, students, as you do know that in financial accounting, we are on a very important topic that is about passing of accounting entries and then transferring them to the ledger accounts. As we do know that in an accounting cycle, we do need to start from recording phase, that is passing accounting entries. Recording phase is known as passing accounting entries, recording the entries into the day books. What are day books? Books of prime entry. How many books of prime entry are there? 7. Namely, do you know the names about them? Do you know their names? Purchases day book, sales day book, purchases return, sales return, cash book, petty cash book, and the last one is journal. So this is recording phase. Then the second phase starts, which is transferring those accounting entries to the ledger accounts. So we are going to learn about that. You need to consider that there are some busy books of prime entry. There are some busy books in the organization. Say, for example, the books related to the purchases, sales, purchases returns, and sales returns are most of the busiest accounts in the organization. So that is why we normally do not pass the separate accounting entries for all those busy transactions. Instead, we do make separate books for them. And ultimately, at the end of the day, we do pass one accounting entry and transfer those transactions to the ledger account. So in the organizations, practically what happens that at the end of the day, all the accounting entries which we do pass in a day has to be transferred to the ledger accounts. Then at the end of the year, the balances on the ledger accounts are transferred to the trial balance. And after the trial balance, what is the final stage? Making of the financial statements. After making trial balance, once the organization is clear that all the accounts are free from errors and mistakes, the balances are then transferred to the financial statements. This is how in the organization the accounting cycle does work. Now, we have looked at so many of the accounting entries. Those accounting entries have been seen which are of regular nature. And you are going to see them in your exam also. Straight away in your exam, in any multiple choice question, they can ask you that for this particular scenario, which accounting entry needs to be passed. And from the given options, you need to select. So I just suggest you to go according to the rules of debit and credit. Do not try to memorize the accounting entries, just you should be clear about the rules behind them. Okay, now today I have taken some questions for your practice. So we can make a practice for the accounting entries, and those accounting entries then will be transferred to the ledger accounts. So we will be learning that how after passing accounting entries, we will make the ledger accounts. So one by one, we are going to have a look at the understandings. First of all, let's read the requirement. You must also know that in your exam, this kind of big question is not going to come. You are at that phase in which the multiple choice questions and multiple task questions can come. And the big type of scenarios cannot be given to you people. Okay, so you will be getting the questions like drag down list, true or false, MCQs, etc. 4 options will be given. Anyone has to be selected. But this is just for your practice. So the requirement of the question is to record these transactions using ledger accounts. They are actually requiring you to make the ledger accounts. But we are going to start with the first phase. First, we are going to pass the accounting entries. Then we are going to make the ledger accounts. Got it? So let's read. Norris notes down the following transactions that happened in June. So for 1 month, there are some transactions given. My online students, are you able to hear me properly?
Yes, ma'am.
Yes, ma'am.
Okay, great. So first accounting entry is sells goods for cash for $80. So first transaction is credit transaction. Is it a credit transaction? It's a cash transaction. There are two types of transactions. We do have cash transaction and credit transaction. A cash transaction is the one in which cash is involved. A credit transaction is the one in which cash is not immediately involved, but it is promised to be paid or received sometime in the future. So the first transaction, which you can see, it's a cash transaction as it's written for cash. In order to judge in the exam whether a certain transaction is a cash transaction or a credit transaction, you need to consider that for the cash transaction, they will be giving you these words for cash. If it's a credit transaction, they will be telling you like sales goods on credit for $80, or they will be telling you, say, sell goods to Mr. Ali. No cash is going, no word of cash is going to be involved. Simply, the name of the receivable will be written. Sell goods to Mr. Ali, sell goods to Mr. X, Y, etc. So cash word will not be used in the case of a credit transaction. So that would be a credit transaction. Anyhow, sell goods for cash for $60. What is going to be an accounting entry for that? Mariam will be telling me. One asset is decreased, okay. Okay, with which name? Cash account will be created. These are sale of goods. When we are selling goods, we are receiving cash. जब हम किसी को कुछ बेचते हैं तो हमें cash receive होता है. So cash is increasing in the business. जब हम गुड सेल करेंगे तो कैश हमारे पास बिजनेस के पास आएगा. जब हम परचेज करेंगे तो कैश जाएगा. So cash is increasing in the business. So when an asset increases in the business, what we do with that? We do debit. So cash will be debited over here. And the other asset, you can say inventory is decreasing, but in this case, we are going to consider it as an increase in revenue, increase in income. Whenever we sell something in an ordinary course of a business, we do call this with a specific term named as sales. जब हम लोग बिजनेस से इन्वेंट्री को सेल करते हैं, वो एसेट सेल करते हैं जो कि हमारे रेगुलर नेचर ट्रांजैक्शन है, जिसके लिए हमने बिजनेस शुरू किया है, तो हम लोग उसको सेल्स का नाम देते हैं. हम ये नहीं कहते कि वो एसेट सेल हुआ है. We are not going to call it as a sale of an asset. We do call it as an increase in income. An increase in income is credit as per the rules of debit and credit. Got it? So debit is going to be, may I write it here? My online students, are you able to see it? So first transaction, we are going to debit cash account since cash is increasing. With which amount? $60. And we are going to credit sales account because revenue income is increasing in our business. If you want to add a narration, you can. Is everyone clear about this transaction? So this is a very regular transaction in a business. Normally in the business, for every cash transaction, for every sales transaction, we do not pass a separate accounting entry. We do first take them to the day books. That is, this transaction will be taken to which day book? No, cash day book. Why? Because in sales day book, we do record only credit sales transaction. Okay, so this will be taken to the cash book. Okay, now the next one, pay insurance premium by check. So this is a payment. It means that an expense has been paid. Pay insurance premium by check. But this time through cash, it is not being paid, but with the help of a check, it is being paid. So Mariam, इस ट्रांजैक्शन में क्या हो रहा है? हम लोग एक्सपेंस पे कर रहे हैं. एक्सपेंस हमारा इनकर हो रहा है. As per the rules of debit and credit, whenever there is an expense being incurred, how do we treat it? We do. Whenever an expense incurs in a business, what do we do? Increase in expense. Whenever expense incurs, we do debit. So what are we going to debit in this case? Afar? Yes. Which kind of expense is happening in this case? Very good. Insurance premium expense account is going to be debited. And what are we going to credit? Bank account. Because our asset, that is bank, it is decreasing. Decrease in asset is credit. So Samiha, we are going to debit insurance premium expense account, and we are going to credit which other account? We are going to credit bank account. Students, wherever you are not cleared, you can tell me. So debit insurance premium expense. Students, I use the short forms, but when you do write, please use the full forms, okay? How much amount is there? $400. And we are going to credit which thing apart? Bank account, because the payment is being made through check. Now the third transaction, students, sells goods for $250. Now over here in this transaction, no word of cash is being involved. So if only this part of the transaction is being given to you, you can simply analyze that this is a credit transaction. Sells goods for $250. The customer will pay in a month. So they are elaborating it also. They are telling you that the customer has promised to pay us in a month. This is clearly a credit transaction. So now the sales have happened. Mariam, sales hui hai. So credit kya hoga? Credit kya hoga? जब ही सेल्स होंगी इन्वेंट्री की, तो वो क्या होगा? क्रेडिट सेल्स होगा. जब ही सेल्स होंगी, एसेट की नहीं, इन्वेंट्री जो कि हमारा रेगुलर बिजनेस का कोर्स है, तो सेल्स क्या होगी? क्रेडिट होगी. ये जहन में बात बिठा लो. जब भी कुछ परचेज होगा, इन्वेंट्री परचेज करोगे, परचेजेस डेबिट होंगी. जब भी सेल्स होंगी, कुछ बेचोगे, बिजनेस से इन्वेंट्री बेचोगे, तो क्रेडिट सेल्स होगा. Got it? So we are going to credit sales since we have made sales, but this time, which asset is increasing in the business? It's not cash. Cash is not coming in the business, but yes, Afaq? No, credit our sales. Sales हुई है, हम लोग credit करेंगे sales को. Debit क्या होगा? Receivables. Now the receivables are going to be debited since the right to receive the money in the future from receivables has arisen. So in the case of credit sales, again, this is a regular nature transaction. So Neha, we are going to debit receivables. Receivables are who? Who are receivables, Mariam?
Who are going to pay us by April?
Very good. Receivables are those persons or group of persons who has purchased something on credit from the business and they have promised to pay us in the future. Is everyone clear about this transaction? Debit receivables, credit sales. The next transaction, transaction number 4, pay $50 petrol for delivery van. Now again, the payment is there. Rabia, what has been done in this transaction? Payment is being made, expense has incurred. Am I right, Rabia?
Yes, ma'am.
So payment is being made for petrol for the delivery van. So whenever the expense incurs, Hizar, what do we do then? We are going to debit it. So in this case, we are going to debit petrol expense account. And are we paying it through cash? Normally the expenses are paid with the help of check or through the cash. So we are going to debit petrol expense account and we are going to credit cash account since cash has decreased by payment of the petrol. Got it? So we are going to debit petrol expense account. How much amount is there? $50. And we are going to credit cash amount, $50. Now the next transaction, 5th, buy $170 goods for resale on credit. My dear students, goods is a word which is used whenever we are purchasing or selling inventory. Goods is the word which is used for those items which we do purchase or sale in the ordinary course of a business, for which the business has started actually. So buys $170 goods for resale on credit. Now again, this is a credit transaction. We have bought goods. So what has happened? Increase in purchases. Whenever the goods are purchased, we do give them the name of purchases. When the goods are sold, we do give them the name of sales. Since there is an increase in purchase, what are we going to do with that? We are going to debit it. So debit will be purchases. And what are we going to credit AFA? It's a credit purchase transaction. Excellent. Debit is going to be purchases. Credit will be payables. Excellent. Debit purchases account. How much amount is there, William? 170. 170, and credit will be payables. So Neha, who are payables? Is it who are payables?
We owe some money.
Very good. Payables are basically the suppliers from whom the business has purchased something on credit, and the business has promised them to be paying in the future. Okay, now the next transaction, 6, buys $57 of goods for resale. Again, the purchases have been made. Now this time paying by check. Again, the cash purchases are being made. This is not a credit purchase. Whenever the purchases are going to be made, we are going to debit it. Increase in purchases is always debit. So we are going to debit purchases, but this time we are going to credit bank account, because with the help of a check, we are paying it. So cash is decreasing, bank account is reducing. So 6 transaction, we are going to debit purchases account. How much amount is there? $57. Okay, now 7th transaction, buy another $50 goods for resale paying cash. Now again, the purchases have been made, but this time we have paid with the help of a cash. So debit will be purchases and credit will be very good. So debit purchases. How much amount is there? $40, and we are going to credit cash account. $40. 8th transaction, students, buy a new computer. Buy a new computer for the business for $800 paying cash. So now we have bought something, but this is not going to be a purchases account, because now asset has been purchased. When they say bought goods, it means inventory has been purchased, which has been purchased for the purpose of resale. Computer has been purchased to be used in a business in order to earn income. This is a purchase of an asset. Whenever asset is going to be purchased, we are going to debit it with its own name. अगर एक बंदे का काम ही कंप्यूटर्स का है, कंप्यूटर वो खरीद के वो रेगुलरली वही बेच रहा है, तो उसके लिए वो परचेजेस हैं, फिर हम लोग डेबिट परचेजेस ही करेंगे. लेकिन उसका काम कंप्यूटर खरीद के सेल करने का नहीं है. It means that now the computer is an asset for that particular person, since he or she is going to use that asset in the business in order to earn income. Fixed asset है, basically तो inventory भी asset ही है. Inventory भी basically तो asset ही है, but it's a current asset. And the non-current asset is going to be purchased so that we can use it in the business. We are going to debit it with its own name. So the asset has been increased in the business. Non-current asset is being increased in the business. We are going to debit it with its own name. So debit will be asset, that is computer. So debit, non-current asset, that is computer account with an amount of 800, and we are paying for this transaction with the help of a cash. So we are going to credit cash account. Is everyone clear up till here?
Yes.
Now, students, we are going to learn to make the ledger accounts. The other name for the ledger accounts is also known as, they are also known as T accounts. We do call them as T accounts. Why do we call them T accounts? Students, will you be able to see from here? If I would be writing it here. Is it possible to see? Students, why do we call ledger accounts as T accounts? Because their shape is like this. This is the shape of a T account, ledger account. That is why we do call ledger accounts as T accounts. So the format which you follow in order to make the ledger account is this. On the left side, you mention debit. On the right side, you mention credit. This is the debit side of ledger account. This is the credit side of ledger account. And then we write dollar amount here. Now, all those transactions, all those accounting entries which we have passed, at the end of the day, they have to be transferred to the ledger account. So one by one, for each and every account involved, we are going to make the separate ledger accounts. Say, for example, first account can be made for cash. So the first ledger account which we are making, it is for cash. So we are going to mention cash account on the top. Now, one by one, see the transactions. In the first transaction, cash is involved. Cash is debit. So on the debit side, how much amount of the cash is being debited? 60. So we are going to write 60 on the debit side of cash account. And here we are going to write the name of the opposite account. By which account cash is getting debited? Sales account. So we are going to write sales account here. Got it? So we have transferred the cash transaction to the ledger account. Now see in the other transactions where else cash is involved. No cash, no cash. In the fourth transaction we have cash. This time cash is getting credited. With which amount? $50. On the credit side of the account, we are going to write how much amount? $50. What is the name of the opposite account? Sorry? Petrol expense. Got it? Now, in which transaction cash is being involved? Savings transaction. Again, cash is being involved. Cash is getting credited. So, on which side we are going to write the amount? Credit side. 40. What is the name of the opposite account? Purchases account. Very good. Again, in the 8th transaction, cash is involved. Cash is getting credited again. On the credit side, we are going to write how much amount, Maria? 800. What is the name of the opposite account?
Asset.
Computer account, we can say, or the whole name you can write. Non-current asset, computer. Got it? Now, after passing all the transactions in a ledger account, the next phase comes to close it. We are not going to close the ledger account on the daily basis. In the whole year, we are going to pass the transactions into the ledger accounts. At the end of the year, we do close them in order to find the balances on these ledger accounts. And then those balances will be transferred to the trial balance and ultimately to our financial statements. Got it, students? So suppose that now the end of the year has come. Now we have to close this account. We are going to total both of the sides, and the total of the heavier side will be written on both sides. So the credit side is heavier, is it? How much amount is there? 890. 890 on both sides. In order to balance this ledger account, on which side do we need to put a balance? On the debit side. So we are going to put a balance on the debit side in order to balance this ledger account. How much balance? 890 minus 60. How much balance will be here? 830. This is the balance we have put on the debit side so that this ledger account could be balanced. My dear students, the balances on the income expenses are ultimately transferred to where? Profit and loss account. The balances on assets, equity, and liabilities are transferred to which place? Statement of financial position. That is why the balances on the asset accounts will be written as balance carried down. And CD means carried down. This balance will be transferred to finally to the SOFP. At the end of the year, when we are going to find this balance then will be transferred to the SOFP. Got it? So whenever you are going to find the balance on the asset account, whichever asset it is, even computer, cash, whatever asset it is, you are going to write balance carried down. In the new year, this balance will be opened again. This one is the closing balance, and now this balance will be transferred to the next year. When in the next year, again the ledger account is going to be opened, this balance will be brought down. So now this will be called as balance brought down from there, 830. Then the new transactions will be started again in this ledger account. And this process continues. Clear up till here? So this balance will be known as a credit balance. This balance, is it? This balance is known as a credit balance. We are writing it on the debit side, but because the credit side was heavier, that is why it is known as a credit balance. If someone asks you that what is the balance shown by the cash account, आप लोग कहोगे कि ये क्या है? Credit balance है. Credit balance 830. कैश का क्रेडिट बैलेंस होने का मतलब ये है कि वो ओवरड्राफ्ट है, ये लायबिलिटी है, वो अब हमारा एसेट नहीं रह चुका. Got it? This is not our asset anymore. In our SOFP, we are going to write it as our liability. It is now overdraft. कैश का नेगेटिव बैलेंस होने का क्या मतलब है कि वो नेगेटिव में चला गया, वो हमारा ओवरड्राफ्ट हो गया है, वो लायबिलिटी बन गया. जब भी एसेट्स, लायबिलिटीज और इक्विटी के बैलेंसेस होंगे, वो अगले साल दोबारा ओपन होंगे. इनकम और एक्सपेंसेस के बैलेंसेस अगले साल ओपन नहीं होंगे. There is again a difference. Anyhow, we are going to consider that. If you are clear up till here, let me know. Clear? Yes, yes, now. No. Balance sheet is SOFP. SOFP is our balance sheet. That is one of the financial statements. Got it? This is ledger account. Then we are on the second stage only. There is a third and the final stage where we will be learning to make the financial statements. Clear up till here, everyone. Now, the next ledger account which we can make is the sales account. In the exam, when you will be doing the working, you can take all the cash account, whichever you have done. Okay. So now the next account which we can make, the ledger account is sales account. Sales account, T account. Debit, credit. In the first transaction, sales are getting credited with which amount? $60. On the credit side, we are going to write it. And what is the name of the opposite account? Cash account. Next again, no, in the third transaction, again, sales are getting credited. How much amount? $250. Name of the opposite account? Receivables account. Then, next, done. Now we are going to close it. The amount of the heavier side is going to be written on both sides. How much it is? 310. Now, because this is an income account, that is why the balance of the income account will not be known as balance carried down. We are going to write it as profit and loss account, because this has to be transferred to the profit and loss account. Got it? How much it is? 310. And one more difference, this is not going to be opened in the next year. In the next year, when again the ledger account for the sales is going to be opened, this balance will not be brought down. This is cleared in the previously. Cleared? Yes. Now the next account, insurance premium expense account. Students, can you please start making it? Now start making all of the accounts quickly. Insurance premium expense account, bank account. Do practice for it. Tell me the balances. So two balances we have got. Cash account, on the cash account we have credit balance 830. For sales account, we have again a credit balance which is 310. Make the ledger accounts and tell me the balances. Aisha and Rabia, are you clear about making ledger accounts?
Yes, ma'am.
Okay, great. Afaq, are you cleared? Okay. Students, as soon as you get the balance, please let me know. Insurance premium, credit balance did you get? Debit balance, how much?
It won't be debit balance. It won't be debit balance. I thought you were asking.
Yes, it will be a debit balance, even in the ledger account, because only one transaction is there for the insurance premium. You will be writing the balance on the credit side, but it will be known as a debit balance. Getting my point? You have made the ledger account, and after making the ledger account, insurance premium is there, and you are putting the balance on this side. The balance will be known as a debit balance, not a credit balance. Okay. Normally, my dear students, normally the balances of the assets and expenses are debit. The balances of income, liabilities, and equity are credit. Normally, this can be asked to you in the exam. When we do debit income, it is credit. When we do increase in income is credit. Increase in equity is credit. Increase in liability is credit. So the normal balance of these three items is credit. And the normal balance of assets and expenses is debit. They can be vice versa also, but I'm talking about the normal balance. Like in this case, cash is an asset. The normal balance of the cash is debit. But in this case, it is credit. Cleared? Yes. Students, the next balance, have you got any balance? Which one? Bank account, how much balance? Debit balance? Again, for bank account also there is a credit. On which side are you putting the balance?
Sorry, we are for putting the value of the right side.
Okay, the heavier side is the credit side. Okay, so how much it is? 457. Okay.
Balance of 254 receivables.
Receivables credit balance? Are you sure? Debit balance. Receivables, debit balance, how much? 250.
So I did the last one.
You didn't do the last one? Receivables one?
Which one do I do? The last one.
Last one is receivables.
Is liquidity for what? For credit?
No, I'm not understanding. Speak in, you can speak in Urdu also.
The last one is liquidity आपने दिया है
Receivables के
कौन सी
लिए
जगह लिखी थी?
receivables का अकाउंट बनाया है, receivables का लेजर अकाउंट बनाया है और उसमें ये बैलेंस आया है डेबिट 250। जैसे ये लेजर अकाउंट सारे बनाए हैं ना, उस तरह receivables का भी लेजर बनाया है और उसमें हमारे पास डेबिट बैलेंस आया 250। मरीम जैसे इधर बैलेंसेस आए हैं ना, ये कैश अकाउंट का क्रेडिट बैलेंस आया है, सेल्स अकाउंट का क्रेडिट बैलेंस आया है, इसी तरह रिसीवेबल्स का लेजर बनाया है, उसमें डेबिट बैलेंस आया 250। क्लियर? Sabiha, have you got any other balance? Sorry, petrol expenses. Debit. Sorry, purchases.
Debit 267.
267. Okay. Okay, please everyone, please make it so that you will be clear about making the ledger accounts. Mariam, are you clear? If you are not, please let me know.
The last one I have is confusion now. Receivables only in 3 transactions we have.
Receivables, okay, make the receivables ledger account. Debit, credit. So in the first transaction, it's getting debited 250. What is the name of the opposite account?
Sales account.
Sales account. Then we have receivables. Nowhere,
No.
only in the first transaction. So we are going to get the balance. First close it, 250, 250. So the balance carried down will be 250. So it's a debit balance for receivables, 250. So that is why receivables debit balance 250. Clear?
What is the difference between CD and BD?
CD, जब हम लोग क्लोज करेंगे अकाउंट तो जो बैलेंस लिखेंगे वो CD होगा, जब अगले साल उसको ओपन करेंगे तो वो बैलेंस BD बन जाएगा। ओपनिंग बैलेंस BD, क्लोजिंग बैलेंस CD. This is known as closing balance in order to close the account. In order to open the account, the balance which we are bringing forward is known as balance brought down.
Income and expense we are not talking next year again.
नहीं, assets, liabilities और equity open होगा अगले साल again. Income or expenses नहीं होगा. Income and expenses they are going to end in profit and loss account. Okay. Yes, the next one. Payables. Which balance? Credit balance. 170. Okay, then. Computer. Yes, computer. 800. Yes, we are done with everything. Has everyone made all the ledger accounts? Mariam, आपने बनाए हैं सारे? आखिरी रह गए?
नहीं, सबके
बना लिए? सबके पास balances आ गए. Now the third step is to make trial balance. इसके बाद अब trial balance में transactions जाएंगी. Students, trial balance is not the part of the double entry system. In exam, this can also be asked. They can ask you that trial balance is the part of the double entry system, whether the statement is true or false. तो आपको क्या कहना है? This one is false. Trial balance is not a part of the double entry system. It's just a memorandum account for internal purposes of the organization. It is not even going to be published. Got it? So हम लोग trial balance बनाएंगे. We are going to make a trial balance. अच्छा, ट्रायल बैलेंस के लिए you are going to make, suppose this is your page, on towards the right side you are going to have a line. Got it? This is how you are going to make a trial balance. Okay. Actually, this is a memorandum account. So whatever type you want to maintain for this trial balance, you can. Sometimes you do make two parts of the page. Like this also, you do make trial balance. Okay. Now all the debit balances you can write over here. All the credit balances you are going to write here. And the trial balance must be equal. The debit and credits must be equal. If not, it means that you have made some mistake. Clear? Now the debit balances are cash is credit. Cash account, how much balance is there? 830. Sales is credit. How much balance? 310. Insurance premium debit. How much balance? 400. Bank account is credit. Are you sure that bank account is also credit? 457. Receivables are debit. How much? 250. Petrol expenses are debit. Samiha, is bank account credit? Are you sure? Okay, petrol expenses are 50. Debit. Purchases are debit. How much amount? 267. Payables are credit. How much amount? 170. Computer is debit. 800. Add up both the sides, the balances should be equal. How much it is? 1,767. Clear? Now from this phase, we do start making financial statements in the organization. Statement of profit or loss is being made first, then statement of financial position, statement of changes in equity, and statement of cash flows. And then ultimately, we do make the notes to the financial statements as well, but there are 4 financial statements. Sometimes the students do think that notes to the financial statements is also a financial statement. There are 4 financial statements. This can also come in the exam. There are 4 financial statements which are prepared by limited liability companies. The unincorporated businesses do not make statement of changes in equity because they do not raise their capital by issuing the shares to the general public. So they do not have equity account. Statement of changes in equity is not there. So are you clear up till here, everyone? Mariam, are you cleared? May I erase it?
This one is really 1,767, but the other part is 1,367.
Is it, Samiha? Is it 1,367?
250 plus 50 plus 267 plus 800. So 1,300.
And 400 is also there on the top. Students, may I erase it now? Rabia, Aisha, are you clear?
Yes,
Yes,
ma'am.
ma'am.
Correct. Students, start doing this understanding number 3. First, pass the accounting entries. Just only pass the accounting entries. Don't make the ledger accounts, just pass the accounting entries quickly. Just once you finish, let me know. Done? Afaq, have you finished? Is it what accounting entry you have passed for 5th transaction? Purchase of stationery?
Depreciation credit cash.
Stationery, are you thinking of stationery as an asset? It's an expense. Okay. So this is a stationery expense because revenue expenses, do you remember? Regular nature transactions. So this is an expense. Most of the students do get confused over here. That's why I'm telling you, stationery will be considered as an expense. So stationery expense account debit and credit will be cash. So the only difference which it is going to make is ultimately towards the financial statements. It will not be written in the asset account, it will be in expense. Okay. Samiha, have you finished here? 4th one. Are you confused in this? Only receives bank interest income. It's an income. So we are going to credit it. Credit will be interest income account, and normally students interest income, bank interest income is credited to our bank accounts. So bank account is going to be increased. We are going to debit bank account. So debit bank account, credit interest income account. On the other hand, if in exam you are going to debit cash account as well, it will be considered as OKs. So debit bank or cash account and credit will be bank interest income. Where are you confused here, Samiha? Which thing was confusing you?
Receive bank interest, I thought it was receivables. I thought the same.
Receivables? No. It's an income. Income for the business. All the earnings made by the business are known as earning. Have you passed the same accounting entry? Very good. So have you finished everything, students? Afaq, where are you? Last one? Are you confused in last one? Okay, yes, yes, please then, please. Samiha, what accounting entry you have passed for the first transaction? Very good. Mariam, what accounting entry you have passed for third transaction?
It's a debit will be expense account for
You are going to write it as telephone bill expense account, credit, bank account.
and credit will be bank account.
Credit will be bank account. Very good.
I just mentioned expense account, is it okay?
No, you need to write it as telephone bill expense account. Because ultimately, when you are going to post the transactions in the ledger accounts, it will then be a problem. For all the expenses, you do not make one ledger account. Differences have to be made. Rabia, what accounting entry you have passed for fourth transaction? Both of them were not here. Rabia or Aisha, whoever is there,
Yes, ma'am.
please tell me that what accounting entry have you passed for the fourth transaction? For the fourth transaction, what accounting entry?
Ma'am, I'm on third one and I'm
Okay, okay, do it quickly.
yes, ma'am. Just wait a minute.
Afaq, have you finished? Okay, what accounting entry have you passed for the sixth transaction then?
Credit sales account.
Sales will always be credit. Sales will always be credit, whatever the case is.
Credit sales.
Oh, you told credit sales account. Okay, okay, okay. Then debit. Yes, very good. So debit cash account, credit sales account, since it is a cash transaction. Very good. Okay, so Mariam, what accounting entry have you passed for the second transaction? Second transaction.
Debit will be receivable account and credit will be sales account.
Excellent. Okay. Is there what accounting entry have you passed for first transaction?
Which uses debit, credit.
Very good. So all of you are clear about the accounting entries now, okay? Rabia and Aisha, do you need more time to solve this?
Ma'am, fourth one may be debit one.
Sorry, fourth will be
Debit.
debit what?
Fourth one.
No, fourth, you need to pass debit and credit both.
Okay, ma'am.
So in the fourth one, debit will be bank account and credit will be interest income account.
Okay, ma'am.
Cleared?
Yes, yes. Okay.
Students, my dear Rabia or Aisha, can we move on to the next understanding so that you can
Yes,
finish
ma'am.
it later?
Yes, ma'am.
Okay, thank you so much. Students, tell me the answer to this one. What is the balance on the receivables account at 31st December 2005? Quickly make the ledger account of receivables. In exam, these kind of questions can also come. You should be very much expert in making ledger account so that quickly you can find the answer. So now Johnny had receivables of 4,500 at the start of 2005. This is an opening balance. Opening asset balance is posted on the debit side. Got it? Balance brought down. Now, Mariam, this is balance brought down. This is opening balance. Johnny had receivables of 4,500 at the start of 2005. So how much are these? 4,500. During the year to 31st December 2005, he makes credit sales of 45,000. What is an accounting entry for credit sales? Debit, receivables, credit, sales. So debit receivables, we are going to post it on the debit side. How much amount? 45,000. The name of the opposite account? Sales account. And receives cash of 46,500 from credit customers. Whenever we receive cash, what is an accounting entry? Cash account debit, credit receivables. So since the receivables are getting credited, we are going to write the amount on the credit side, and the opposite account is cash account. Clear? Okay, what is the balance on the receivables account at 31st December 2005? Close this account and tell me the balance. This one is the heaviest side. 45,000 plus 4,500. 49,500. The balance will be written here. This will be now balance carried down. So Neha, now this balance is balance credit carried down. CD. This one is the closing balance. This one is the opening balance. Okay, now this one is how much? 3,000. So this one is which balance? Debit balance. So this is 3,000 debit balance. Clear? My dear students, one thing which you need to keep in your mind while doing the exam question like this. Whenever something is increasing an asset, it is on debit side. Whenever something is decreasing asset, it will be posted on the credit side. So simply with the help of the calculator, you can also do it. Whenever the credit sales happen, it increases receivables. Increase in asset on the debit side, it will be posted. Opening balance on the debit side. Whenever you are going to receive the payment from the customers, it is decreasing asset now. It is decreasing your receivables. You are going to post it on the credit side. Cleared?
Yes.
Decreasing asset over here, the asset which I mean to say is receivables. Whenever we are going to receive the cash from the receivables, receivable asset is going to be decreased. तो मरियम जब भी कोई हम लोगों ने शो करना होता है कि एसेट के अंदर इंक्रीज हो रहा है तो उसको डेबिट में ऐड करते जाओ, उसमें डिक्रीज शो करना है तो उसको क्रेडिट में ऐड करते जाओ, डेबिट ऐड करके उसमें से क्रेडिट लेस करके तो बैलेंस आपके पास आ जाएगा. क्लियर सनीहा? Aisha, Rabia, are you clear about this understanding?
Yes, ma'am.
Okay.
What about the question which you were doing? We have to ledger accounts.
No, for this one, no. It will take a lot of time. Once you start making the ledger accounts, it will then make a lot of time will be required. Are you clear about making ledger accounts? We are going to try for a few questions, but not for everyone. From home, if you want to try to make ledger accounts, you can. Okay. Okay, now over here. In this understanding, we can make few ledger accounts, not for all the accounts, but few ledger accounts we can make. Okay, quickly pass counting entries for this. Complete the relevant ledger accounts. Everyone quickly start. This is not YouTube subscription.
It will be equity.
Equity.
What will debit? Which account will debit?
Matthew subscribes for 10,000 of share capital in the newly formed company, paying by check. So in the company, bank account is increasing. Paying by check in the company now, in the business, bank account is increasing. So bank is going to be debited and equity is going to be credited.
Credit equity account.
Yes. Bank account will be debited. In the business, what is increasing? In the business, bank account is increasing and the right of the owners is increasing. When equity increases, we have to credit it. When the asset increases, we have to debit. यहाँ पर again आप लोगों ने business entity concept apply करने की कोशिश करनी. Business में bank account increase हो रहा है and the business bank account is increasing. Rabia or Aisha, were you asking something?
No, ma'am, you are not asking.
Oh,
We are listening.
okay. Whenever the capital is invested in the business, the same accounting entry will be passed. Cash account or bank account debit, capital or equity is going to be credited.
So we would have like specific name for equity.
No, they are going to. Whenever there is an unincorporated business, they will be telling you that the capital introduced in the business. So debit cash, credit capital. When the shares are going to be subscribed, then it's equity. Because only those companies which are incorporated do have the permission to, issue their shares to the general public. Unincorporated businesses, not the limited, not the public limited liability companies, they cannot issue their shares to the general public. Now over here, the students who are just on the initial stage, they do get confused when they see that paying by check. They think that bank account is decreasing because it's written as paying by check. Over here, specifically, you need to apply the business entity concept that in the business, cash is coming. From the pocket of the owner, the cash is decreasing, but we are obliged to, follow that business entity concept. Done? All the transactions? Please compare your transactions with these which I have passed.
Ma'am, we can't see. Can you take a picture of this and send it?
Please repeat.
Can you take picture of this and send in WhatsApp?
Sure, sure, sure.
Thank you, ma'am.
Let me just finish, I will send it to you. Sorry? Clear now? Yes, yes. Yes, students. Compare your transactions. Are they the same?
Yes.
Clear, everyone? Mariam, have you compared your transactions? Is everyone clear? Now you can make any two ledger accounts. Okay, make the ledger account of bank and make a ledger account of purchases. Make two ledger accounts just for your practice. Do not see here, okay? Just after finishing, you can just compare your answer. How much balance did you get? Have you done it in the same way? How much balance? I got 4,500. 4,500? But I got a total different. Sorry? I got a total. No, the totals, Samiha, the totals are going to be different. That's why you are going to put the balance. The total of the heavier side have to be put on both sides. Oh, I got 7,000. 7,000 is balance you
Oh,
got.
7,500 coming.
Sorry?
7,000. the total balance of credit should be, the total credit is 7,000.
Okay.
11,000. 4,000 plus 2,000 plus 1.
This one, 10,000 plus 1,500, 11,500. The total of the heavier side has to be written on both the sides, then balance has to be extracted. Got it? This is the way to close it. 11,500. The total of the heavier side will be written on both the sides. Then from that side, the lighter side is going to be subtracted. $4,900. I got 4,900 balance. 11,500 minus 6,000, and that's 7,000. Yes, you are right. You seems to be right. 4,500, you are right. So now this balance is known as balance. This is known as debit balance. In the next year, it is going to be opened again since it is an asset account. 4,500. Cleared? Okay, now make the next ledger account. Purchases. Mariam, are you clear about this? Which one? Nothing out of it.
No, first one I did it was debit equity 2,000. And then 1,500. Which one?
1,500 sales. Wait, 1,500. Yes, this one. Bank account is getting debited. Opposite account is sales account.
I thought you were doing first one and second one.
No,
First one and fifth one. Or all.
no, my dear, wherever the bank account is coming, wherever the bank account is coming in all the transactions, you have to post them over here. Clear? In the first transaction, bank was getting debited 10,000. So this 10,000 is written. In the second transaction, bank was getting credited 4,000. 4,000 is written. In the third transaction, again, bank was getting credited 2,000. 2,000 is written. Then in the fifth transaction, bank was getting debited 1,500, written. Then bank was getting credited 800, written. Bank was getting credited 200, wrote it. Then the total of both the sides have been done. The total of the heavier side is written on both the sides, 11,500, since debit side has been heavier. So balance is being posted in order to make them equal. So balance of 4,500 is then written. It's a closing balance. Next year it will become opening balance. Balance carried down, balance brought down. Clear? Now make the purchases account. Debit 5,000. Okay. Yes, you're right. 5,000. Afaq, are you cleared? Rabia, Aisha, I'm sending you the picture of this bank account also.
Okay, ma'am. Okay, thank you.
Compare your results. If
Yes.
you are not clear, do not hesitate to ask me, because this is the basic.
Sure,
You will
ma'am.
be clear about this, then in future you will be able to cope up with financial accounting. Yes, dear?
Sure, ma'am. I will ask if I have
Okay.
problem.
Students, can we move on? Now, students, we are starting again an important topic that is about accounting equation. Accounting equation is assets is equal to liabilities plus equity. Again, accounting equation is based upon the same rules. It tells us that assets at any time should be equal to the liabilities and equity in the organization. As I told you at the earlier stage, that assets are resources in a business, whereas equity and liabilities are sources of the business. Sources to get finance in a business are equity and liabilities. And assets are the resources which are bought in the business by using these two sources. मरियम, बिजनेस के अंदर एसेट्स वो चीजें हैं जो कि हम लोग यूज कर रहे हैं in order to increase income, in order to earn wealth. इन एसेट्स को लेने के लिए जो दो सोर्सेज हैं, इनको परचेज करने के लिए वो इक्विटी है और लायबिलिटीज हैं. Either a business is getting the investment from the equity shareholders or it is getting the investment from the third parties, not from the shareholders. Say for example, banks, friends, etc. बिजनेस के अंदर इक्विटी और लायबिलिटीज की मदद से एसेट्स लिए जाते हैं और फाइनेंशियल अकाउंटिंग में इसका कंसर्न ये है, every time total of assets must be equal to the equity and liabilities. These three elements of financial accounting are finally being found in the statement of financial position. Three elements of the financial accounting which we do take to the statement of financial position are assets, equity, and liabilities. Balance sheet SOFP is based upon this accounting equation. Why do we call SOFP statement of financial position as the balance sheet? Because it should be balanced. Assets presented over there in your statement of financial position must be equal to the sum of equity and liabilities over there. Got it? This is accounting equation. On the basis of this accounting equation, the debits and credits are always equal. When we do make the trial balance also, the debit and credit is equal. Clear? So assets are debit, equity and liabilities are credit. They should be equal. We can rearrange this also and we do call it as assets minus liabilities is equity. This tells us that whatever is remaining in the business after deducting liabilities is the right of equity holders. बिजनेस की तमाम ऑब्लिगेशंस फुलफिल करने के बाद जो कुछ बिजनेस में रह जाता है वो किसका राइट है? शेयर होल्डर्स का. Whatever is remaining in the business after fulfilling all the obligations, after fulfilling all the liabilities, is the right of shareholders. And this is the major benefit which attract the shareholders to invest in the company. Otherwise, they can simply save their amount in the bank accounts and earn interest. उनके पास ये बहुत बड़ी अट्रैक्शन है बिजनेस में इन्वेस्ट करने की कि जो कुछ भी रिमेनिंग होगा बिजनेस में आफ्टर डिडक्टिंग लायबिलिटीज इट बिलोंग्स टू देम. गॉट इट? Students, here is an illustration. We are going to apply the accounting equation over here. The requirement of the question says use the accounting. Samiha, are you having a problem? You're not able to see it because of this? Is it fine now? Okay. Use the accounting equation to illustrate the position of the business at the end of each day. Ignore inventory for this example. So anyhow, we are going to make an accounting equation and we are going to see that how is it going to be balanced in any case. So we are going to write an accounting equation on the top. What is that? Assets is equal to liabilities. Maria, what is accounting equation? Assets is equal to liabilities plus equity. So the transactions of a new business in its first 5 days are as follows. My dear students, you can pass the accounting entries for these transactions as well. But right now we are trying to apply the accounting equation concept over here. So anyhow, the day one transaction is Avon commenced business introducing 1000 cash. Business के अंदर 1000 cash invest किया गया है. In the business, cash is coming. What is cash? Asset. So we are going to write cash under assets. Day one, cash is coming. How much? 1000. At the end of the day, debit and credit, both the sides must be equal. So on one side, asset is increasing. On the other side, what thing is increasing? Equity. So now your accounting equation is equal. Am I right? Capital of 1000. At the end of the day, both the sides are equal. On the left side, we have 1000. On the right side, we have 1000. Day two, bought a motor car for 400 cash. Day two, motor car has been bought. What is motor car? Asset. How much amount is there? 400. 400 is increasing. Now, how the both sides are going to be equal? What is happening? What the other thing is happening? Bought a motor car. What is an accounting entry? Debit motor car, credit cash. So now one asset is increasing and the other asset is decreasing. Which asset is decreasing? Cash. How much? 400. So again, the accounting equation is equal. There is no effect on the other side, but still the accounting equation will remain equal. Then day 3, obtained 1,000 loan. What is an accounting entry for obtaining loan? Very good. Cash account is going to be increased, asset is going to be increased, and on the other side, liability is increasing. So 1,000 cash asset, 1,000 liability loan. So debit is going to be over here. Cash, how much? 1,000, liability of. Because this investment, this amount is taken from the third party. So accounting equation is equal. Purchase goods for 300 cash. What is an accounting entry? Purchased goods for 300 cash. Now cash is decreasing, but on the other side, what we are going to do? Purchases, but purchases are not here.
Asset.
Asset. Clear? So we are, because sometimes we can get confused when the purchases expenses are not there. So we are going to consider it as an inventory. So purchases, asset, we can say inventory is increasing, but what is the amount? 300, and cash is decreasing 300. So our accounting equation is going to be balanced. Sold all the goods purchased on day 4 for 400 on credit. On day 4, we had purchased the goods for 300, but now we are selling them for 400 on credit. It means that 100 remaining is our profit. Very good. So what is an accounting entry for sales, students? Debit is? It's on credit. No, it's on credit, sales. Debit is going to be? Receivables. How much amount has to be received from receivables? 400. But the goods which we are selling are how much? 300. What is the remaining 100? Profit. So credit is going to be profit account. How much amount? 100. Profit, the balance of profit is always credit. The balance of loss is debit. So how are we going to adjust it over there? How much inventory is going to be lost from the assets? 300 is going to be lost from there. What about the receivables? How much asset is going to be added? 400. One asset of 300 is going to be deducted. And this profit is going to be where? Where it is going to be mentioned? Equity. It is going to be mentioned in equity. So accounting equation is going to be balanced. Profit. Who has the right on the profit? Sorry? What are you not getting? Please tell me. About profit?
Profit is right of the owner.
So we are going to add it in the equity. Yes. This you are not clear that why we are adding?
Equity is assets minus liability.
Equity, yes. Equity is assets minus liability.
Why are we putting profit of 100 right now in equity? That is something.
Because profit ultimately is going to be added in the equity.
It's going to be added after we deduct liabilities.
No. The profit will be becoming the right of the equity holders, but it will be given to them only after the liquidation of the company. Some of the profit can be given to them during the life of the company as well, that is dividends. When you are going to make the SOFP over there in your final stage also, you will see that in the share capital we do add profit. The net profit figure every year we are going to get from the statement of profit or loss will be added to the equity every year. Some of the profit will be retained in the organization for future expenses, for future, whatever the organization has, and some is going to be given as the dividend. Cleared? All of the amount is not going to be given to them in the form of dividends. Okay, now what we are going to do, so debit is going to be receivables in day 5. One asset, Receivable is increasing. What is the amount? Inventory is decreasing with 300, and equity profit will be 100, which will be added in the equity. Cleared? If there would have been drawings, it will be deducted from the equity. Normally, for limited liability companies, the shareholders are not allowed to make the drawings during the year. But in exam, if they ask, you can deduct it from equity. Cleared? Equity will drawings, whatever they are going to withdraw, it is going to decrease their right in the business. From capital, basically, sole traders or partners can withdraw during the life of the company. Shareholders cannot withdraw. Okay, but just in order to show the treatment, you can deduct the drawings from the equity if it comes. Okay. Cleared, everyone, about accounting equation? Aisha, Rabia, are you cleared?
Yes, ma'am.
Were you able to see it as well? Accounting
Yes.
equation?
No, ma'am. Can you send?
You should be seeing it when I was doing the transactions. I feel that now there is no use to see.
Ma'am, we can see, but it is very far.
Sorry?
We can see, but it is very far away.
Yes, Tia, because it is not taking a proper focus.
So I was listening to your voice.
Let me just take a picture. Maybe it is going to help you.
Okay.
Just compare it then with the illustration shown, okay? Mariam, are you clear, dear?
Yes, ma'am. Just about the second one. One asset is increasing, other asset is decreasing.
Yes.
I have not mentioned any. The others.
Yes, because accounting equation, yes, both the effects can be on the same side. If the asset is increasing, we are going to debit it. If the asset is decreasing, we are going to credit it. So both the effects can be on the same, in the same element also. दोनों effect एक तरफ भी हो सकते हैं. दोनों effect दोनों तरफ भी हो सकते हैं और effect तीन accounts में भी इकट्ठे जा सकते हैं. ठीक है? Clear, everyone? Now, students, can we have a break? Okay, so up till 11:30.
Yes.
Up till 11:30, we are going to pause. Today also we will have an informal kind of a meeting. So 11:30, okay? My online students,
Yes, ma'am.
we are going to have a break. 11:30, we are going to join.
Okay, ma'am. Thank you.
You are welcome here. This is a new chapter that is returns, discounts, and sales tax. The accounting entries which are involved in this chapter, we have already done. We have already done them in our, in those notes we have done these. But over here, we are again going to revise. So returns, this is about sales, purchases returns, discounts, it is about cash and trade discounts, and sales tax, it is a tax which is going to be levied ultimately on the final customer. On the purchases and sales, it is going to be present. So about these three things we are going to learn in this chapter in slight detail. Not a lot of detail is present about these things, but little bit detail is present. We are going to discuss that. Now, my dear students, we do know that sometimes the sales which we do make to our customers on the basis of few facts, they can return those products to us. They may not like the product may be defective or not as per the quality which has been promised. Whatever the case is, the sales can be returned to us by our customers. Similarly, the purchases which we are making from our suppliers, business can also return those purchases back to the suppliers on the basis of the similar facts and figures because of not liking the product, not as per the promised quality, etc. So in this case, the purchases returns and sales returns are going to occur. Purchases returns and sales returns both can occur in the cases of cash transactions as well as credit transactions. But normally, generally, frequently, these transactions do occur in the case of credit transactions. Purchases returns and sales returns do normally happen when the credit transaction is there. Purchases return is also known as return outwards. Purchases which we are making, we can return them out to the suppliers because at the time of return, they are going back to the supplier, they are going out of the organization. That is why they are known as return outwards. Mariam, purchases return को हम लोग return outward भी कहते हैं. Other thing is that what are purchases return? When we are purchasing something from our supplier and we are returning them again to our supplier, this is known as purchases return or return outwards. Purchases return मरियम क्या है? हम लोग supplier से कुछ खरीद रहे हैं और हम वापस कर रहे हैं वापस अपने supplier को, ये purchases return कहलाता है. On the other hand, we do have sales returns. These are those sales which we have supplied to our customers, but they are not like the product since they have returned the products to us. So that is why they are known as sales returns. The other name for sales returns is return inwards. इनको हम return inwards इसलिए कहते हैं क्योंकि ये organization के अंदर दोबारा वापस आ रहे हैं. Sales returns वो है जो कि हम लोग customers को sale करते हैं और वो हमें वापस कर रहे हैं. ये sales returns हैं. Normally, in the case of purchases returns and sales returns, we do, opposite. We do make the entry opposite. We do reverse the entry. Accounting entry is going to be reversed in the case of purchases returns and sales returns. If, say, for example, in the case of cash purchases, the accounting entry is purchases debit, cash credit. When purchases returns, which were initially made on cash basis, are going to be returned, the entry is going to be reversed. The entry will become cash account debit, purchases returns account credit. Instead of purchases, now the word which we are going to use will be purchases returns. So in the case of cash purchases, purchases debit, cash credit. In the case of purchases returns, which were initially done on the basis of cash, we are going to debit. We are going to debit, which thing? Cash account will be debit, purchases returns is going to be credited. Clear? In the case of cash sales, the accounting entry is cash debit, sales credit. In the case of sales returns, which were initially done on the basis of cash, when we have to return it, sales returns account debit, cash account credit. So we are simply going to return the transactions. If we are going to reverse the transactions. If we are going to purchase the goods on credit, the accounting entry is debit, purchases, credit, suppliers, credit, payables. When we are going to return those goods, what is going to be the accounting entry? Debit, payables, credit, purchases, returns account. So we are simply going to reverse the transactions. So what they say for both of the things, originally the credit transactions are there and originally a cash transaction is there. In the case of credit transaction, when we are going to make the sales returns or return inwards, what accounting entry will be there? Sales returns account is going to be debited and credit is going to be receivables. When the transaction is initially on the credit basis and we are returning the purchases, the accounting entry is going to be reversed. It will become debit, payables, credit, purchases, returns account. If the transaction was originally on the cash basis, when we are going to make the sales returns, the accounting entry will be debit, sales returns, credit, cash. When the transaction was initially on the cash basis and we are returning the purchases, the accounting entry is debit, cash, credit, purchases, returns. Are you clear? So simply we are going to reverse the transactions. Samiha, are you clear here? Mariam, clear? Now still is understanding number one is there. This is particularly about the transactions, purchases and sales transactions, and then their return also is involved in these transactions. So for each of the following state the double entry required to record the transaction in accounts. Alfie transfers 10,000 of his personal savings into the business bank account. What is going to happen in this transaction? In this particular illustration, students, there are so many accounting entries, not particularly the returns. Returns are also there, but there are other entries also. Anyhow, what is the first accounting entry? Debit bank account, credit, cash. One asset is increasing, other is decreasing. LP transfer 10,000 of personal savings into the business bank account. Yes, credit would be equity account. Very good. So this is not from the business, it is just from the personal savings of the owner. So because LP is the owner, he is considered to be the owner of the business. So in the first transaction, what we are going to do, debit will be bank account, credit will be equity account. Amount is $10,000. Then he then buys goods from Isabel, a supplier, for 1,000 and pays by check. What is happening? Purchases. Debit is going to be, Mariam, you tell me the accounting entry. He then buys goods from Isabel, a supplier, for 1,000 and pays by check.
Purchase account, debit.
Purchases account is debit and credit. Payables are going to be debited with the same amount, 1,000. Third transaction, a sale is made for 400, the customer pays by check. AFA.
Payment is in the second one, payment is done by check. It's not on credit. It should be.
Oh, sorry.
Bank account should be.
Yes. Thank you so much for correcting, dear. So it's not a credit purchase, dear. Mariam. So credit is going to be, look, they say, pays by check. Okay, so the third case, a sale is made for 400, the customer pays by check. Afaq, what is an accounting entry? Debit. Sales are always going to be credited. Okay, so debit is?
Bank account.
Very good. Debit is going to be bank account, 400, and credit is sales account. Fourth transaction, Elfie makes a sale, $600, and the customer promises to pay in the future. What is an accounting entry?
Receivables.
Very good. Debit receivables account, credit sales account. Excellent. How much amount? 600. Fifth transaction, Elfie then buys goods from his supplier, Cameron, for 500 on credit. Samiha? Very good. Purchases account debit? Very good. Credit is payables account. That is Cameron. My dear students, it's better if you can write the name with the payables also, because when we do make the individual ledger accounts, we need to make the statement of accounts in reality, in practical situations, and we should be knowing that how much amount has to be received from which payable, or how much amount has to be paid to which payable. Okay, so what is the amount? 500. Sixth one, Elfie pays a telephone bill of $150 by check. Mariam?
6 months, telephone bill of $550.
Very good.
And credit will be bank account.
Very good. So telephone bill expense account is going to be debited. Amount is 150, and credit will be bank account. With the same amount, 150. Then student, seventh transaction, the credit customer pays the balance on her account. Now you have to see that how much balance has been on the credit customer. How much sales we have made? This one sale has been there, but this is the cash sale. This one has been the sale, but the cash has not been paid. So 600 has been received from this customer. 600 has been received from this customer because the amount is not written over here. So initially, in the previous transactions, we have to see that which transaction has been made on credit before. So the credit customer pays the balance on her account. What is going to be the accounting entry for this? Seventh is debit bank account. Very good. Credit receivables account. So the amount is 600. Initially it was for 600. 8th transaction, Alfie pays Camel 340. What is going to be the accounting entry, Mariam? Yes, Alfie pays.
Debit will be bank account.
No, he is paying, not receiving. Business is paying. Bank account will be, cash account will be credit. Cash is going out of the business, cash is decreasing. And debit will be payables. Who is payable? Camel. Look, previously from Camel purchases have been made. This one, 500, maybe fifth one. Yes, fifth one has been from Camel. This one was Camel. So now 340 out of total 500 has been paid. Credit is cash account. Clear, Mariam?
Yes.
9th transaction, bank interest, $30 is received. Samiha? Okay, bank account debit, very good. And credit will be? Income is increasing. So bank interest, income is going to be credit. Clear, everyone?
This credit can be like receivables.
No, we are not receiving from receivables. Dear, credit, we are going to credit receivables when we are receiving the amount from receivables. जिन लोगों को हमने उधार पर चीजें बेची हैं, उनसे अगर हम पैसे रिसीव करेंगे तो हम लोग receivables को क्रेडिट करेंगे. When we are receiving income, then income has to be credited. Got it? Okay, then a cash customer returned. A cash customer returned $20 goods to L3 for a refund. Now, cash customer is returning. So it means debit will be sales returns account and credit will be cash because we have to refund the amount. Debit will be sales returns amount is $20 and credit is cash account. If this would have been the credit transaction, then we would have given the credit to the receivables. Very good. Then 11th transaction, LP sent goods of 100 back to Camel. Now these are purchases returns. From Camel we had purchased on credit and we are returning the goods back to Camel. What is going to be the accounting entry? Debit would be? No. Debit would be payables. Camel and credit would be purchases returns. जब हम purchases करते हैं तो purchases debit होती हैं. जब purchases return करते हैं तो वो credit हो जाती है. We are going to debit payables. Who is payable over here? Camel account. 100 is returned and credit is purchases returns account. Purchases returns are also known as returns outwards. Clear? Samiha, are you clear?
Please,
7th one. A credit customer pays the balance on the account. We have received the amount from the receivables. So debit is bank account, credit is receivables. When we do make a sale, what is an accounting entry? Debit, when we are making the credit sales. Debit is receivables, credit is sales. When we are receiving the amount from our receivables, we are going to debit bank account. We are receiving the amount, that's why we are debiting bank account. Since the balance of the receivables account is decreasing now, we are going to credit it. When we are receiving the amount back from them, it means that now the future, the right has expired to receive the amount again. That is why we are going to decrease them. Clear? That is why we are going to credit receivables. Clear? When we are making the sales, we are increasing the receivables. When we are receiving the amount back, we are going to credit. Clear now? Clear, Mariam?
We haven't told what are we going to write payables because we are going to pay. So
LP sent goods of 100 back to Camel. LP, now the business is sending back the goods to Camel. Camel has been a supplier. From Camel, the goods have been purchased. LP then buys goods from his supplier Camel. Previously from Camel, the goods have been purchased. The accounting entry has been purchases account debit, credit, payables, Camel. Now, because we are returning the goods back to Camel, that is why payables account is going to be debited and credit would be purchases returns. Got it? Cleared. LP is a business over here. Clear, everyone?
Yes.
Samiha, cleared? My online students?
Yes, ma'am.
Okay, now students, understanding number 2. It is for understanding trade and settlement discounts. Students, we do know already that discounts are of two types. Trade discounts and cash discounts. Cash discounts are also known as settlement discounts. What is a trade discount? The discount which is allowed or received at the time of purchasing or selling goods, at the time of fixing the list price of the goods or services, at the time of bargaining. The discount which is received or allowed is known as a trade discount. So a discount which is received or allowed at the time of fixing the list price, at the time of making a purchase or selling the goods, at the time of bargaining is known as a trade discount. The discount which is allowed or received at the time of making a payment to the supplier or receiving the payment from the customer is known as a cash discount or settlement discount. Settlement discount will be offered when there is early settlement of debts. Whenever we are going to make the settlement of the debts earlier than the promised date, the discount which is going to be allowed or received is known as a settlement discount or cash discount. हम लोग किसी से कुछ खरीदने के लिए गए हैं और हम देखते हैं कि लिस्ट प्राइस जो टैग प्राइस लिखी हुई है वो है 10 दिरहम. 10 dirhams is the price written on the goods which we have went to purchase. Now we have started bargaining with the supplier that give us some discount on this price. The supplier says that okay, 1 dirham, I am going to give you a discount. So this is known as a trade discount. So the accounting entry for this will be for the business, it will be purchases account debit, credit would be cash. If it is for cash transaction, credit will be payables if it is a credit transaction. So the accounting entry will be debit, purchases, credit will be payables with an amount of 9. No separate accounting entry will be made to show the discount, that is trade discount. We have just made the amount, we have deducted the amount of discount from the list price, but we are not passing any separate entry for trade discount. This is the treatment of trade discount. Clear, everyone? Now, say for example, this accounting entry has been credit transaction as there is in the case. Now, at the time of the purchase, we promise our payable that at 30th of October, I will be paying you this amount. This 9 dirham is going to be paid to you at 30th of October. But before to the settlement date, the business go to the supplier at 25th of October and says that I am here to settle your amount, but give me some discount on that amount. Now, this is known as a settlement discount, which is going to arise because of early settlement of the discount. In that case, what we are going to do, we are going to debit payables with an amount of $9, but We are going to credit cash. Say for example, one more dirham is given as a discount to us. We are going to credit cash account with 8 because one more dirham is given as a discount. That is a settlement discount because of early settlement of the amounts. And we are going to credit discount received account. That is 1. This is going to be the accounting entry for the settlement discount then. Cleared? If no discount will be given to us, then payables debit 9, cash credit 9. We have paid them the full amount. Clear about this? This is how we are going to treat the trade and settlement discounts. Now, my dear students, here is the understanding number 2. Show how the above should be recorded in both the banks of Oliver and Sam. So there are 2 parties. We are required to record the accounting entries in both of the books of Oliver and Sam. Read the scenario. Oliver sold goods with a list price of $1,000 to Sam on a cash basis and allowed her a trade discount of $10. So Oliver is, sorry, 10%. So Oliver is, who is Oliver? Okay, Oliver is a person who has supplied goods. And other party is Sam. Oliver has sold goods with a list price of 1,000 to Sam on cash basis and allowed her a trade discount of 10%. So while selling the goods, what accounting entry will be passed? Debit will be receivables. Is it? And credit would be sales account. And who is receivable in this case?
It's a cash payment.
Is it a cash payment?
Cash.
Yes, sorry. So cash account is going to be debited and sales account is going to be credited. How much amount is going to be passed over here? 10% discount, trade discount on 1,000. So 10 rupees, $10 discount will be there. Yes, 1,000 total amount is there. So $100 is going to be the discount. Am I right? So how much amount is going to be passed? 900. Clear? This is for trade discount. In the books of Sam, what accounting entry is going to be passed? Debit purchases. How much amount? 900. And credit? Cash account. 900. Cleared? This is how the trade discount is going to be treated. Online students, are you clear? Now from here, a little bit complexity is involved. So please try to focus. This is a detailed illustration, and this can be tested in the exam also. This type of transactions can be tested in the exam also. So everyone listen carefully and attentively. Students, we have to see the settlement discount from the perspective of seller and from the perspective of purchaser. How the settlement discount will be treated from the perspective of seller and how the settlement discount will be treated from the perspective of purchaser. First, let's consider from the perspective of seller. Who is seller? The person who is selling the goods and services to the other party. Okay, now, at the time of selling goods or services, when there is a case of settlement discount, at the time of selling goods or services, the seller does not know that whether this settlement discount will be availed or not. Am I right? When we are selling the goods, at that time we are not aware that whether the settlement discount is going to be taken or not, because it can be taken only in the future. But the transaction has to be passed right now at the moment. Got it? If at the time of, suppose for example, the transaction of 9,000 is being made. The transaction of 9,000 is being made. The goods have been sold for $1,000. At the time of making the sales, sellers do not expect that the settlement discount is going to be availed. do not expect at the time of sales, seller does not expect that settlement discount, ST, settlement discount will be availed. Then the accounting entry which is going to be passed is debit. What is the accounting entry at the time of sales? Debit, receivables, credit, sales account. If there is no expectation that the settlement discount is going to be availed, the accounting entry is going to be passed in this manner with an amount of $1,000. The settlement discount offered is 10%, say for example. If as per expectation, the settlement discount is not taken as per the expectation, then an accounting entry will be debit, cash with the full amount, $1,000, and credit will be receivables account, $1,000. It can happen, but contrary to the expectation, if the discount has been taken, then what accounting entry has to be passed? Credit will be receivables, even if the discount has been taken. Credit will be receivables account with the same amount which we have passed. Now, the seller has to allow the discount. Am I right? Debit will be revenue. Discount allowed is basically decrease in revenue. Got it? We do write the accounting entry as discount allowed to receivables. This is what we have learned. But discount allowed is basically a decrease in revenue. Decrease in revenue is debit. We are going to debit revenue with the 10% amount. How much it is? 100. And the cash amount which we have received after deducting the discount is 900. This is going to be the accounting entry. Clear? This is not clear.
When we do it, get clear.
This is the same scenario you are going to see over there as well. Look over there. The first scenario, the customer was not expected to take the advantage of the early settlement discount terms offered. So this is the same scenario which is going to be followed over there. Can you try that particular illustration? See these transactions and apply these ones on the first case. In the case of A, an entity sold goods to customer on credit at a price of $200, and the customer was offered 3% settlement discount for settlement within 10 days of the invoice date. How should this be accounted for in the books of seller if the customer was not expected to take advantage of the early settlement discount terms offered? So they are not telling you all of the scenario. You can just pass they are asking about the first transaction only. If the customer is not expected to take the discount. But I just request you to pass all the transactions. If the initial expectation is not to have the settlement discount, what is going to be the accounting entry? If as per the expectation the sales discount, settlement discount is not taken, what is going to be the accounting entry? But if taken, settlement discount is taken, then what is going to be the accounting entry? Clear? Not very clear. Okay. May I erase it? Aren't you having a problem in understanding my writing? Is this the case? Okay. No one is understanding. Marie, no one is not understanding also. Actually, I feel after the break, you people become tired and you are not able to grasp the concepts. Okay, let's do it. Sabiha, are you cleared? Sorry? Okay, let's discuss it directly. Okay. In the first case, the customer was not expected to take the advantage of the early settlement discounts. An entity sold goods to a customer on credit at a price of $200, and the customer was offered 3% settlement discount for settlement within 10 days of the invoice date. At the time of the sales, we do not know whether the customer is going to take the settlement discount or not. So in the first case, the entity is not expecting that the customer is going to take the discount. So the accounting entry at the time of sales, the accounting entry which is going to be passed will be which? Debit will be receivables account, credit will be sales account. Since the customer is not expected to take the settlement discount, that is why the full amount accounting entry is going to be passed with the full amount, that is $200. This is just the requirement of the question. The question is asking you only this much. But further to this one, if in actual customer does not take settlement discount as per the expectation, then debit would be cash account, credit would be receivables account with the same amount, $200. Students, receivables are always going to be credited with the same amount with which we have debited them. The difference arises in the case of cash. The amount of cash only is going to be changed. Receivables and payables are always going to be credited and debited with the same amount. Clear? Then, contrary to the expectation, in actual, customer receives settlement discount. Then, credit would be receivables with the same amount, that is 200, with which we have debited. But now the cash which we are receiving is lesser as per the expectation. The cash received by the business is now lesser than as per expectation. Now 200 is not being received, but 3% settlement discount is there. How much is there? Settlement discount is 6. 6 is settlement discount, and the amount which we are receiving is 194. So the cash of 194 is being received, and we are going to debit revenue. That is 6. Decrease in revenue which we are showing is 6. We had actually recorded the sales with 200, but now the sales amount is going to be 194 only. So ultimately in our SOPL also, this decrease in revenue is going to be shown. That is 6. Because the amount which we are getting from our sales is now not 200, but it is 190. Clear? Mariam is just looking at my face continuously. Breathe, it's okay. Have a look at this once again. So now you create. Yes, dear.
प्लीज उनको बता दो, मुझे समझ नहीं।
जरूर जरूर। पूरा अच्छा, हम लोगों ने कस्टमर को सेल्स की है, उस टाइम जिस टाइम हम सेल्स कर रहे हैं उस टाइम हमें नहीं पता कि कस्टमर सेटलमेंट डिस्काउंट लेगा कि नहीं लेगा, क्योंकि सेटलमेंट डिस्काउंट उसी सूरत में मिलेगा जबकि पेमेंट अर्ली की जाएगी, प्रॉमिस डे से पहले की जाएगी। लेकिन जिस टाइम ट्रांजैक्शन हुई है हमने तो उसी टाइम ट्रांजैक्शन पास करनी है। सपोज करो कि जिस टाइम ट्रांजैक्शन हुई है उस टाइम सेलर सोच रहा है कि कस्टमर डिस्काउंट अवेल नहीं करेगा, कस्टमर वाज नॉट एक्सपेक्टेड टू टेक डिस्काउंट, इसका मतलब ये है कि वो पूरी अमाउंट हमें देगा। उस टाइम ट्रांजैक्शन के टाइम हम लोग जो अकाउंटिंग एंट्री पास करेंगे वो डेबिट रिसीवेबल्स क्रेडिट सेल्स होगी, ठीक है। अगर हमारी एक्सपेक्टेशन के मुताबिक जब टाइम आया है पैसे देने का तो वाकई कस्टमर हमें उतने ही पैसे पे करता है जितने हमने एक्सपेक्ट किए थे, हम अकाउंटिंग एंट्री करेंगे डेबिट कैश अकाउंट क्रेडिट रिसीवेबल्स अकाउंट पूरी अमाउंट से। लेकिन हमारी एक्सपेक्टेशंस के बरक्स अगर जो कि हमारा कस्टमर है वो पहले पेमेंट कर देता है और डिस्काउंट हमें उसे देना पड़ जाता है तो हम लोग क्रेडिट और रिसीवेबल्स उसी अमाउंट से देंगे, लेकिन अब जो कैश हम रिसीव कर रहे हैं वो ऑब्वियसली लेस है, हमारी एक्सपेक्टेशन से कम पैसे हम वसूल कर रहे हैं। 194 हम रिसीव कर रहे हैं और जो रिमेनिंग अमाउंट है वो डिक्रीज इन रेवेन्यू है, जो हमें अमाउंट नहीं मिल रही वो हम लोगों ने सेल्स में से लेस कर दी है, डेबिट कर दिया है, रेवेन्यू को हम लोगों ने डेबिट कर दिया है 6 अमाउंट से। क्लियर? योर Can you erase it or shall I write it over there? I think over there I should write. Aisha, Rabia, for you, shall I send you the picture or are you able to see it? Okay, now, without looking at that scenario, students, this can also happen that at the time of sales, seller expects that settlement discount will be taken. Suppose 1000 की ट्रांजैक्शन है और उसमें जो सेटलमेंट डिस्काउंट है वो अगेन 100 का है सेटलमेंट डिस्काउंट। Okay, the settlement discount is for 100 on the total transaction of 1000. So at the time of sales, now seller is expecting that discount will be taken. Then which accounting entry is going to be passed? Accounting entry will be the same. Debit will be receivables. Credit will be sales. But now the amount which is going to be passed will be for 900. Because at the time of transaction, the seller is expecting that the customer will be taking a discount. Clear? अब अगर customer expected है कि वो discount लेगा, तो at the time of the transaction जो हम लोग amount लिखेंगे वो net off होगी discount से. Clear? We are going to net it off for the amount of discount. Now, if as per expectation the customer takes the discount, customer actually takes discount, then what is an accounting entry? Same, debit, cash account with an amount of 900. Credit is very good. Receivables account with an amount of 900. But if customer does not take discount, even then the receivables are going to be credited with an amount of 900. Receivables are always going to be credited with an amount of with the same amount. But now over here, the amount which we are receiving is how much? 1000. The amount which now the business is receiving is now 1,000 because the customer has not taken a discount. So we are going to credit revenue. Very good. Now the revenue is increased by an amount of 100. This will be the difference only. Cleared? Now can you solve this part B in the light of those transactions? Can you try? And nowadays, again, these transactions are coming in the exam. You know, IFRS 15, revenue has changed. Not recently, but change has been, has come over there. And before to this change, normally the accounting entry was the same: discount allowed, debit, and receivables credit. Got it? Same accounting entry used to be passed, and over there the discount allowed used to be the selling and admin expense. Simple treatment has been there. Because now IFRS 15 has been changed, this transaction is tested. Because now instead of writing discount received and discount allowed as our indirect income and indirect expense, we are deducting it from the revenue, from sales. In this adjustment is now done in the sales. So because this is a new thing, that is why examiner is testing it regularly. And in F7 and then P2, this is going to be in detail tested. Over here in this IFRS 15 is going to be discussed generally in this FA. But in F7, in P2, it is going to be discussed in detail. Favorite topic of the examiner nowadays.
And then debit credit, there was no revenue.
Sorry?
There was a debit credit.
Sales revenue. Basically, this is about sales revenue. Revenue is sales. But here, when we are going to do it as per discount allowed and discount received, do not write the names of sales revenue. Okay? Because sales revenue, it is always that whenever the sales income, we do credit it. Has everyone done this part? The customer was expected to take the early settlement discount. What accounting entry has to be made? Debit receivables account, credit sales account, and the amount is 194. 194 it was. So 194 because the customer has been expected to receive the discount. So this is the requirement of part B. But you have to see further, if the customer actually takes the discount, then debit would be cash, credit would be receivables account with the same amount, 194. If does not, then debit, cash, full amount of 200, credit would be receivables with 194, and credit would be revenue account. This is revenue, this is receivables. 6. Cleared? Rabia and Aisha, shall I send you the picture?
Yes, ma'am.
This is very difficult for the online students. Can understand. What happened? About not getting cleared.
Yes.
Nothing is clear. I feel that you people are tired. Is it try to make him clear? Are you clear by yourself? Okay, then try to make him clear. What are you not understanding of our tell me? Nothing. Now your brain has stopped absorbing anything. What about you, Samira? Maria is continuously looking at my face. What happened?
Take it half.
Okay.
Where is this 194?
194. After deducting 3% of settlement discount, 3% of 200 is 6. And after deducting 6 from 200, we do get 194. Actually, the requirement of the question for part A Is this only this transaction for part B, only this? This is for the further case. What happens next? Okay, have a look at this. Rabia and Aisha, are you cleared?
Yes, ma'am.
Okay, great. Clear, everyone? Shall we move on? Okay, now students, this one was the seller perspective. Now we have to see from the perspective of purchaser. Who is purchaser? The person who is going to purchase the goods. And this is simpler than the case of the seller. When we are purchaser, then there is no such thing as expectation. When we are purchasing, obviously, when we are purchasing, we are going to pass the accounting entry with full amount, with the gross amount every time we are going to pass an accounting entry, because there is no such kind of expectation that whether we are going to receive the discount, whether we are not going to receive the discount, we are purchaser, we are the decision maker by ourselves. Okay, so at the time of purchase, if say for example, 1,000 is the total amount and 100 is the settlement discount. At the time of the purchase, the accounting entry will always be passed with the gross amount. Debit, purchases account, credit, payables account. With an amount of 1,000. Every time at the gross amount, it is going to be passed. No such case of expectation. If settlement discount not taken, then full amount has to be paid. Full amount has to be. Then debit is going to be payables account. Credit will be cash account. If settlement discount is availed, then debit will be payables with 1,000 every time. They are going to be debited with 1,000. But now cash which is being paid is lesser 900 and remaining credit is discount received. Here we are going to use the term of discount received.
Why can't we use revenue?
Because these are purchases, no revenue. We are not making sales. Okay, so this is an income then for purchaser. For purchaser, he is not a seller. Got it? So no credit is going to be given to the revenue. Now this will be an indirect income. This will be coming. Okay, so this will be the indirect income for us. Discount receipt account is going to be clear. This is the perspective of purchase. Very simple. If the discount is going to be taken, then payables to cash with full amount. If discount is availed, then debit payables with full amount. Credit cash account 900 and credit discount received 100. Let's see this transaction illustration. An entity sold goods to customer on credit at a price of $200 and the customer was offered 3% settlement discount for settlement within 10 days of the invoice date. How should this be accounted for in the books of purchaser? The same type of illustration has been given, but now you have to record the transaction from the perspective of purchaser. So from the perspective of the purchaser, every time with the gross amount means full amount. The transaction has to be passed, debit purchases account with full amount of $200. Credit will be payables account with the full amount 200. Got it? If settlement discount is not available in actual also as per the initial transaction, then debit will be payables 200, credit will be cash account 200. But contrary to this initially passed transaction, if discount is received, then if settlement discount is received, then debit would be payables as usual with full amount 200, credit will be cash as lesser amount is paid, net of discount 194, credit will be discount received account as an increase in indirect income of 6. Increase in income is credit. We are going to credit it. Cleared?
Yes, ma'am.
Still 5 minutes are there. Why are you wasting time again and again? Yes, dear. You have to do the practice. Don't worry. When you are going to do the practice for 2 to 3 times, see the book, you will be getting it. Okay? Initially it happens. Yes,
Please, that much is enough.
that much is enough? Okay. Oh, we are not going to move forward. We have to discuss only CS slides. So this is enough for today. But just do the practice for it. For management accounting, please go through the revision kit once again. There was a difficulty in the last question, I remember, for that one. Management accounting. For that particular question, there has been, please have a look at that one. Please do as per your thinking. We are going to discuss it later, okay? And please go through the BT as well. Whatever chapters we have finished, please go through them, okay? And for financial accounting, please do open the exam kit also. Do make a revision from the book, study text, and the questions from the exam kit also do practice for them, okay? Aisha and Rabia, are you cleared?
Yes, ma'am.
Okay, so we are not moving forward. This is all for today. Have I sent you the BT slides? At that day, I did not send. Then later did I send?
Not yet.
No? Okay, let me just send it. For yesterday, management accounting is also not being sent. Yesterday, we did nothing for management accounting. We did the exam questions, okay? So I will be sending the recording, but slides are not. So my online students, I'm ending the meeting now. Have a nice weekend. Take care of yourselves. Okay, goodbye.